Hello and welcome. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi. And if you're a bull, you would want to forget this afternoon because it's not turning out to be a great day, whether it's about the stock markets or the playing field. And I say that because India versus New Zealand is not turning out the way we had anticipated. India was bowled out at 46 itself in the first session. New Zealand has already made 53 for 0, so that's the kind of performance that we have managed to put up, or the lack of performance, if I can call it that. Not the best of the days coming in for the men in blue. And it's clearly not a great day for bulls as well in the trading session because we went below the mark of almost 24,750. We're still around that level as far as the market mood is concerned. A fall of almost 270 points from the highest point of the trading session, threatening to go below the mark of 24,700. So that consolidation sideways move that we were talking about and the fact that there was a floor to the market has come a bit undone today. And one of the reasons why the market is bleeding today is Bajaj Auto and the auto sector. Over 30,000 crore worth of market capitalization eroded, the biggest single day fall that we have seen since 2020. And the fact that that stock is down 12% right now, quite a bit of carnage on that one. And it's of course having the effect on rest of the auto companies as well. So a Hero, an M&M, all of those stocks are down and out. TVS as well coming under pressure as far as some of these auto names are concerned. Additionally, the earnings coming in haven't been that great. Take a look at Nestle. At first look, the numbers looked impressive, at least on the bottom line. But then you got to know that there's a 290 crore exceptional gain that has actually supported the number there. Margin was a miss. The top line was, broadly in line or a slight bit of weakness coming in there. So no major boost coming in from the earnings as well. But what's perhaps Street banking on is earnings which are later in the day. Take a look at indices up almost 2.5%. Wipro is doing quite okay in the green. Tech Mahindra is charged up. So I think Aisha, it's only IT which is in the green right now, but autos firmly on the back foot.
Yeah, absolutely. In fact, take a look at Bajaj Auto. That's at the session lows. It's a 12% carnage that you've seen on the street for this one. In fact, at one point in time, the top 5 losers on the index were all from within the auto pack. While they have not resurrected at all, some of the other weaklings have joined that bandwagon. Nestle, after its numbers, is now around 3.5%. There's Shriram as well, which is lower by about 4%. Hero MotoCorp languishing around the 3.5% cut mark. M&M down 3.5%, and that can be said about Maruti as well, which is down about 2.5% as we speak. Even though for Bajaj Auto, the numbers optically looked in line, but muted festive demand commentary didn't quite go down well with the street. The brokerages all through and through have downgraded the stock price, but it also comes on the back of almost a 60% uptick that the stock has already seen. So it seems like more price to perfection kind of case, and which is why the sell on news. For Nalco, of course, Alcoa has spiked 10% post its good numbers and the outlook thereof, which is why you're seeing that bump up on Nalco as well as Hindalco, still holding on to the gains, fortunately. But other than that, just marking the list of winners, and like Anisha flagged off, it's largely the IT names. Infy, of course, is going very strong into its numbers. Futures up about 2%, and SBI is about a 0.5% sort of uptick right now that you're seeing on the screens. Let's welcome on board then Andrew Holland, Naresh Mirani, Kunal Bothra to talk about where they see the markets headed from here. Kunal, did you anticipate this? A very flat start and then this over 200-point fall?
No, not at all. I think we were actually looking out for the index of going to consolidation and remaining into a range. But I think the selling pressure in the first half an hour, first 1 hour was quite brutal in the larger cap names, and especially on the back of the renewed selling which had come back into the auto stocks. I think that spooked the market a bit. Now you have almost 10 stocks out of the Nifty 50 which are trading below their long-term moving averages, 200-day moving averages. So I think the number of stocks which are falling below their longer-term moving averages almost on a daily basis, is increasing. So that should act as a pressure point for the index. We're still trading very close to that major support point of 24,750 mark for the index. So I think if we manage to break below this level and close, say by a margin of 100 points, 24,650, then I think we could be in for a much more severe downtrend for the indices.
Andrew, did you see this kind of carnage set out, or rather anticipate this kind of carnage on Bajaj Auto post its numbers? Andrew?
I think that the two things that came out of it wasn't the numbers per se, it was more the commentary, wasn't it? It's about that the festive season's not, whilst it's kind of picked up a little bit, it's not nowhere near, I think, anyone's expectations. So it's really thrown a whole damper on the whole market because, I think we're all hoping, or the market was hoping that the festive season would start to see, a pickup in consumption. And that's clearly not likely to happen now. And you throw on top of that we anyway expected a weak earnings season across the board. The market valuations doesn't support downgrades, whether it's a company or the sector or the market overall. So, I think the market could see if these are kind of earnings continue like this, then you could easily see another 5% correction from here.
Okay, so that's the take coming in as far as Bajaj Auto is concerned. And yes, rest of the market is also suffering in the red. But let's take a look at the broader markets now and see what's happening. Emphasis is actually holding up 6% higher. In the morning, I thought that Street might be disappointed about that deal win number. But no, they're quite excited about the revenue profile and the kind of commentary coming in from the management that the mortgage business is actually bottomed out. So that stock is up 6%. You also have Titagar Wagons, KVB, which is, of course, the result reaction coming in the last few minutes. That stock in the green right now. Hunasa is doing well in the trading session. So a lot of these buzzers from the broader markets, but on the losing side, Oberoi Realty is coming under pressure, KEI continues to bleed, and then Piramal Enterprises too. Andrew, what's your view on consumption? Because yes, premium consumption has been doing well for a while, but over the last few months, the rhetoric had moved to mass consumption, rural consumption. But it seems to be now gravitating again towards premium consumption. What's your view on that?
Yeah, we've been a big fan of the premiumization, particularly of in the kind of alcohol and non-alcoholic business, and I don't think that's going to change. That's going to continue. But again, I think the market's been banking on a number of things. One was rural consumption or spending starting to pick up, and it's not really coming through. Government spending and private capex has not really started to happen. So all of these factors which would, kind of play into your earnings story into the second half of this fiscal is not playing out. And I can throw in many other factors as well of why the markets have seen FPI selling. And of course, we've still got the geopolitical situation tense. And I think the other factor that we have to start looking at now is the US elections. We're only a few weeks away. And that's going to throw its own either surprises or negatives, particularly if former President Trump gets in, because the tariffs he expects to impose, or I said he would impose, could be very bad for US inflation and lower growth. I don't think that's a scenario the market's looking at the moment in that Goldilocks soft landing scenario for the US.
Okay, that's the link between consumption and, of course, what's going on in the world. Let's just take stock of what else has been beleaguered under pressure. And, there's definitely autos and real estate too. Like we just flagged off, Oberoi Realty alone is down about almost 6% as we speak right now. Andrew, once we are out of the festive season, you think within the consumption pack, perhaps retail and consumer durables is what's going to stand out as a winner, or do you see any other categories as well? Because autos clearly is not the case.
I think I'd probably go for more defensive consumption stories than anything else, because whilst the RBI governor was pretty kind of staunch in his views of 7.2% GDP growth. I think we're staring at more like 6.5 to 6.7% GDP growth, and that's a big slowdown. So unless there's some monetary policy which will help, I really don't see this picking up so quickly. So I think there's a problem for GDP growth, and I think that's then that will spill over into consumption. So I think you've got to be very careful of what you're buying and why you're buying at the moment, because I think that some of the themes will continue to play through. But in between that, you've seen it from the likes of Dabur and so forth. It's the margins are under pressure, and that's not going to go away from you. And I think that's the story: is the margin pressure that you're going to see across all companies this earnings season.
Right, okay, we're going to take a very quick break on that note, but the World Investor Week, it's a global investor awareness campaign celebrated every year across the world by security market regulators, and the week witnesses a whole host of awareness activities across the globe, and investors are explained about the importance of investor education and protection. This year, World Investor Week is being celebrated in India from the 14th to the 20th of October. SEBI, in fact, is the national coordinator for celebrating the World Investor Week 2024 in India. Investors are invited to participate in various investor awareness activities by visiting SEBI's website at investor.sebi.gov.in. Back to closing trades right here on ET now, and still status quo really, although one must say that we're kind of the world laggards today. While it was a 1% downfall for Shanghai, but that market is extremely distinct and reacts to very different kind of news flow. Yes, Hong Kong as well was lower by about 1%, and that's over 200 points. But there you have the Nifty, which has also fallen over 200 points. Europe is actually not all that bad at all. In fact, some of those markets are holding out very smartly, while Nestle has cut their full year guidance. But you've got the DAX as well as the CAC, in fact, higher in trade right now. 1.25% of an uptick coming in for the CAC. DAX holding up almost about 170 points. Even the broader markets like the Stock 600 are up about almost 0.5% as we speak. So very distinct than what the Western markets at least are doing. And for now, the US futures as well are marginally higher. In fact, if nothing, the NASDAQ is actually scaling higher by nearly about 150 odd points. But that said, while autos as well as real estate continue to be the pressure points, let's welcome on board CA Rudramurthy as well and find out what he's making of the market right now. Rudra, let's pick up on autos specifically. Do you see further pressure coming in for a Bajaj, Hero MotoCorp and even M&M for that matter? They are the weakest links amongst the auto majors right now.
See, for me, yes, whatever happened post the results and the correction of about 10 to 12% in Bajaj Auto can just continue for another 2 to 3% kind of a move on the downside. Long-term support for this stock is at around 9,400, 9,500 zones. So I may not advocate a shorting at current market price or after a fall of 10 to 12%. However, yes, if someone wants to bottom fish and have this stock to your portfolio, wait for those levels of another 3 to 5% kind of a correction, and one can definitely buy at those levels. And if you see even Hero MotoCorp as well as even stocks like TVS Motor, similar chart patterns are seen. But however, shorting earlier would have been better. At this current market price after this fall, I will not advocate a shorting here. Rather wait for another 2-3% kind of a move on the downside, and then it will be a better risk reward to buy at those levels than shorting here.
Point taken. In the meantime, let's take stock of Tata Communications and Havells. Both came out with earnings. For Tata Communication, it's a miss on the bottom line because we were working with a number of 267 crore. The actual number for Tata Communications has come in closer to 227 crore. Even though on the top line, it's largely in line with expectation. Don't see any major exception other than a 43 crore exceptional that they have, but overall looks like a weak set. And for Havells as well, it's a disappointing set yet again. It seems like in terms of the bottom line as well. And if you look at the individual segments, Lloyd's has reported a loss yet again. There's a 24 crore loss coming in for Lloyd. On a year-on-year basis, there's a decline in terms of profitability of the switchgear business, of the cable business. Even though the revenue of cable business has gone up, there's a pressure on the profitability, which clearly means that margins of the cable segment are under pressure, and this is exactly what panned out with KEI as well. And for the last couple of days, we have seen that pressure in KEI stock. Even lighting and fixtures has not done too well. Electric consumer durables is down both in terms of quarter-on-quarter and year-on-year basis. So Havells clearly taking it on the chin. In fact, if I can get you here, Andrew, to talk about Havells and consumer durables specifically, because this is one stock which time and again has disappointed with earnings. Maybe one quarter it performs okay, and then the next couple of quarters are again weak, and it hasn't been able to come out of that entire limbo. But the stock still continues to hold steady. I mean, apart from those one-day blips that come, here also there's a bit of a buying on bottom. How would you, recommend people to invest in Havells, if at all?
Well, I mean, I haven't seen the numbers. I've just seen them flashing on your screen. So it seems as though it's the margin problem again, and I think you'll see this will be across the industry. So I don't think it's a one-off for just this company. I just really want to emphasize that it will be a margin story this this earnings season. And I think all we're talking about is the pressure on margins and how that can be relieved. So, I don't think, whether it's one stock or it's a whole sector, I think you're just going to find that it's going to be disappointing. And I don't think there's anywhere to hide at the moment. And that's the problem. I think the only way to hide is to hide in a bit of cash. So, I think increasing your cash levels for the next few months wouldn't be a bad idea. Given with earnings aren't going to help you, you've got US elections and you've got geopolitical problems, and plus we expect China to do another stimulus. All of that plays badly for India in the short term.
A lot of moving parts right now. It's best to stay and hide in cash. That's the word coming in from Andrew. But Kunal, would you have a view on Havells and Tata Communications? Both have disappointed with their earnings.
Yeah, I think Havells has given a breakdown, fresh breakdown. So today the stock has managed to break below its 5-7 day swing low. I think it was trading close to that 1900, 1950 levels for the last 8 to 9 days. But then I think today the stock has managed to confirm that break, as well as a break below its the 50-day moving average. So I believe that the next course of price action could be on the downside for the stock. But looking at today's volume, I believe that the extent of downside could be a bit more restricted and not be as huge, like a double-digit kind of a correction for the stock. So maybe another 3%, 4% correction on the downside, which could take the stock back towards 1775, 1780 odd mark. So that could be a good point to try and re-enter the stock. That would also coincide with the 200-day moving average. Tata Communication, on the other hand, this could be an interesting play because the stock is trading exactly at its 200-day moving average today. It's been an underperformer of sorts over the last 2-3 months. The stock went through a correction from 2,150. That was the high I think the stock had made. It's corrected almost 300 points. So which means we could be looking at a point where the stock could probably find a bottom pretty soon. So I think 1800, 1850 could be a good range to go for a contraband Tata Communications.
Okay, that's the take coming in on Tata Com and where those figures would be headed right now in trade. But let's also get you the management of KEI, and they spoke about their margins as well as guidance after posting a steady set. Hear it out from Anil Gupta, the CMD.
We can't give such a long range guidance. We have already guided that this year we expect to do around 10.5 to 11% overall EBITDA in the full year. So our guidance remains the same. If we are able to do better, we will definitely aim. We have already given a guidance of a top line growth of 15 to 17% in overall in the full financial year. And we are on track.
Right, okay, Andrew, great to have you on the show. We'll let you go on that note. Thanks as always for joining in with your views. Half an hour into the last lap of today's trade, investor down a good 200 points on the index alone. And of course, it's coupled with a very bad breath. Only 17 stocks actually within the F&O basket are standing to the green. Rest all 167 in the red as we speak right now. Let's get in some closing strategies then on that note. Rudra, what's on your list?
See, for me, SBI looks very strong, and in a weak market like today, it has given a very short-term break above 808. And staying above those levels in a weak market tells to me that more steam is left on the upside for SBI. So I will be a buyer in SBI looking for initial target of 835 to 850. And one can have a stop loss for this long call at 795.
Now, what about your strategies?
I'll go with the buy on India Mart. That's a chart which has been holding up pretty well, forming a bullish flag formation and recovered quite well from the intraday lows of 2980, 2985 on the spot levels. So it looks attractive and could look out for targets in the range of at least 3120 to 3150 for India Mart.
Okay, on that note, let's take a very quick break. Still down a good 12.5% for Bajaj Auto. We'll continue tracking markets on the other side.
Welcome back. Well, the market mood continues to be a bit more somber. It's been worsened by some of the earnings which have been weak. Take a look at Havells. There's no respite there. That margin performance has been really disappointing and disappointing across the board. Pick up any of the segments right from switchgear, cables to Lloyds to consumer durables. There's a miss across the board. The investor presentation for Havells is out as well, and we'll run the important commentary coming in from the management for you at the bottom of the screen. But they are talking about high volatility in the commodity prices that has impacted the contribution margins. They are saying festive season shift has led to advancement of A&P spend to Q2, and that's the reason the margin is under pressure, because they are seeing some sort of advancement of costs coming in into Q2, and that's why they are expecting some pressure there. In terms of the other details, there's not much color about the outlook and the festive season as such, but they are talking about the insurance claim that they had to deal with in one of their factories. They're talking about decent growth in switches and domestic switchgear business. However, industrial switchgear growth impacted by higher base due to large institutional orders that were there last year. The cable segment volume growth has been strong as per them. They're saying it's predominantly driven by wire, which also aided the spillover from the Q1 destocking. But that volume growth is not translating into the EBITDA, and that's the real problem that the street is grappling with right now. They're also talking about internals like the cable margins impacted owing to absorption of high cost inventory against falling raw material sales prices during May to August period. So all of that is impacted. So higher A&P spend coming in. There is volatility when it comes to the various prices of the raw material. Plus this entire switchgear business, etc., is adding a bit of a problem area for Havells right now. That stock is down almost 6 to 7% right now. Whether there'll be more cuts coming in, whether there'll be some brokerage downgrades, etc., we'll get to know that only tomorrow. Let's quickly take a look at Tata Communications while we're at it and while we're addressing some of the earnings as well. That too has been under pressure. It has seen a bit of a recovery from lows, but it is under pressure. So, look at all the stocks that we have been seeing in terms of reaction to earnings. Bajaj Auto down 12%. We had Nestle coming during the day. That stock was down 3 to 4%. You also have these couple of names coming in the last 1 hour, Tata Communication and Havells. The stocks which are reacting positively are Emphasis maybe and a Karur Vysya Bank, but other than that, most of the earnings have been on the weaker side, and that seems to be the Q2 early indication. Sudeep, would you concur with the view? Q2 early indication suggests margin weakness and a miss on earnings, more downgrades than upgrades?
Well, unfortunately, that looks like the scenario. I think there is definitely pressure, and that is getting reflected in the financial numbers which are coming out in Q2. I would think that IT would be an outlier. There is generally a much better performance and much better traction as far as technology companies are concerned. But many other sectors are witnessing pressure. Very clearly, the earnings are under pressure. Of course, there is the silver lining that we had a good monsoon and the festive season has kicked in. So half year can be different. We'll have to wait and watch for the festive sales numbers for pretty much all the sectors, including automobiles.
Right, okay, that's the take coming in consumption. Sudeep, what's your take on autos? You think the best for the year is behind us, clearly?
Really, things can change very fast. We have seen some pressure and there is some inventory accumulation at the dealership, and there is some challenges as far as liquidation of old inventory and things like that is concerned. But festive season has just kicked in. We have a long festive season. There is the Dasera event followed. We are going to have Diwali. We are going to have many other festivals followed by Christmas, New Year. So let's wait and watch. Also, I must say that rural consumption, there are definite signs of pickup in rural consumption in multiple pockets. It's not that uniform, but in pockets, rural consumption is picking up. There are a lot of activity happening as far as government spending is concerned. So I won't really kind of discount the possibility of a consumption pickup in second half of the current fiscal. Let's wait and watch. As things stand today, there is pressure, but I won't say we have seen the best already.
Okay, we perhaps haven't seen the best. There is still some room and optimism there. Sudeep, could you talk about Havells individually and what will be your sense there? Because as we were discussing with the earlier guests as well, this one has time and again disappointed on the earning front. Every quarter there is either a volume impact or a margin impact or something like that. And the stock also hasn't done much compared to the rest of the market.
Well, unfortunately, what you're saying, absolutely right, Anisha. I think, the margin has been a problem. Volumes have gone up in different points of time, but the margin continues to remain under pressure. And that is definitely worrisome. I'll probably wait and watch for the Polycab numbers and what Polycab is showing as far as margin is concerned, and then be in a better position to compare and comment on the relative position. I don't know whether this is a general market issue where the margins have come under pressure or it's a company specific thing. Let's wait and watch.
That's quite interesting. Okay, wait and watch mode when it comes to some of the other players from within the sector, Polycab being one such case in point. But Kunal, on the charts for both Havells and Polycab, because they too have come off quite significantly from their 52-week tops.
I think Polycab is one of the stronger one. And I think the stock which had done reasonably well. I remember I think there was a point where the stock fell from 5,500 to 3,800 odd mark, 3,800, 3,700 mark in a matter of I think just about 2-3 weeks. And post that we've seen the stock recovering, doing exceptionally well. Even in the last 3-4 months, the stock had done reasonably well, climbing up from 6,500 to almost 7,500, 700 levels, which it tested. So it's just that in the last 1 or 2 days is where you've seen the stock going into an underperforming zone. So when a stock outperforms in the toughest of the market conditions or in the most volatile conditions of the market, and then caves in or rather corrects in the last phase, that's where we probably believe that it's more of profit booking, but the strength is still intact into the stocks. So I would believe Polycab is one of the strongest, stronger names out of the two. In case if the stock happens to retest its 50-day moving average, which is at 6,750, 800 levels for Polycab, that could be a very good level to go for a contra buy.
Okay, and Polycab also comes out with its earnings later today, so it would be interesting to watch whether it's able to carry forward the same sort of margin disappointment that we saw from KEA and Havells, or is the company able to outperform on the margin bit? That's something we'll try and watch as we get those numbers. But talking about earnings, as we were highlighting, Karur Vysya Bank is now sitting with a gain of 7%. So after the earnings were out, the stock slowly and gradually moved up, but now it's at the highest point of the trading session. There's a definite momentum there, so a thumbs up coming in from the street as far as Karur Vysya Bank is concerned, and Emphasis too 6% higher. In fact, on that note, here out what Emphasis management had to tell us. They talked about the bottoming out of the mortgage business. They talked about BFSI picking up in a gradual way. They were very confident about maintaining their margin band of 14.6 to 16%. Here out what the management had to detail out earlier.
Q4 calendar typically seasonally weak. Some of that seasonality will play out, but we do expect that we can continue to see growth trajectory build up again between Q3 and Q4, and that's why I think for a full year basis we still believe that we can continue to grow above market. So I think that's the guidance purely based on order book, pipeline, deal book, in-client activity, and of course improving macro, especially around BFS. The deal pipeline is actually up about 23% on a YOY basis in Q2, and also up low single digits on a sequential basis. We also had a pretty big jump YOY last quarter. So I think if you look at the stages, origination of deals clearly seems to be originating deals. There are two trends to call out in the pipeline. One, we've definitely seen, even in the TCV number, we've seen a healthy mix of the sub 10 million deal category, even actually the sub 5 million deal category. That's been the biggest jump even on a YOY basis. That indicates that in-year quick consumption, short burst programs are getting funded, and that's a sign of discretionary spend slowly coming back. We called that out in March, April as well, and we are seeing that play out in the last quarter as well.
Okay, that's what's playing out for the IT pack and of course Emphasis in particular. Where are we currently at? Still down about 200 points, 24,839 for the index. Other than the sectors that we just talked about, Sudeep, where else do you think you'd be a buyer in this current decline?
A couple of sectors I like, which includes metals. I know there is a lot of volatility in metals and a lot of uncertainty around metals. But the fundamental fact which remains is that US interest rates are coming down. And when US interest rates come down, invariably metals gain. Yes, there is a big China factor, which is a question mark, whether there will be further stimulus, whether the metal demand will zoom in China. All this is a big question mark. But having said that, I think the US interest rates are definitely coming down, and there is a strong demand for metal in India as well. So I am in the favor of buying aluminum value chain, because that is one which is a structural shift. People and businesses are moving from traditional other metals to aluminum. Look at the transition from IC to EV. I think the use of aluminum has grown multifold. Instead of iron, steel people are using aluminum. Look at the modern appliances. Look at pretty much everything which is happening around us. The use of aluminum is growing by leaps and bounds. So structurally, we are positive on Nalco, Hindalco, and even Vedanta. So from a long-term point of view, all three are a good buy. Vedanta, of course, has the additional, corporate restructuring benefits, which at some point of time will accrue to the shareholders.
And that's the view coming in on some of these metal names. Which are the other F&O top losers? Let's take stock of that. Havells, of course, will feature in that list. Bajaj Auto does. But there's Oberoi Realty, Piramal Enterprises and BHEL as well in that list. See, Rudramurthy, what would be your take on Oberoi Realty, Piramal Enterprises, BHEL?
On Oberoi Realty, it has just taken that support at 1,750 and gave a very clear bounce, and it went on till that levels of around 2,000, 2030 zone, and we are seeing some profit booking today in the general market correction. However, the chart patterns of Oberoi Realty is really good, so I will be a buyer in this stock. Might be levels closer to that 1,850 to 1,870. One can definitely look at buying Oberoi Realty. This is just a correction what we are seeing in today's market. Any dip in this stock, I will be a buyer. But if I see the chart patterns of BHEL or even for that matter Piramal, that is on a different move altogether. Shorter term trend in BHEL is definitely down. Lot of crucial supports have got broken, and if it breaks now and closes below these levels of around 250, furthermore downside in BHEL can be seen to levels closer to 220. So I will be looking at shorting opportunity in BHEL, and Oberoi will be a buying opportunity on dips. And if I have to look at even Piramal stock, again, this is just in a consolidation mode now, and it is just resting closer to its support zone of around 1,020, 1,030 levels. So I will be a buyer in Piramal. Might be keep a stop loss of around 980. Look at buying it closer to levels of around 1,000, and Piramal and Oberoi will be on the buy list for me.
Point taken, but Bajaj Auto continues to reel under pressure. In fact, let me bring on board some of the expert opinions that we had earlier in the day, because if you hear out the president of FADA or the vice president, he's talking about how the festive season is expected to be very good. They've already seen double-digit growth as per him in the festive season, and they're expecting it to continue for the entire year. And they're also talking about how the discounting has increased. In fact, the discounting is 2x to 3x than what we had seen normally. So he's saying it's not fair to compare this year with last year, because last year was very different. This year there is a bit of a pressure on margins, pressure on demand. Hear out what Mr. Sai Giridhar, the Vice President of FADA, had to tell us.
For first 10 days of the festivity is that there is a double-digit growth, and if you talk about two-wheeler segment in particular, it's approximately 12% growth if you compare it with last year. So we are still bullish, and we are still believing that we'll be able to achieve a 20% growth in this festivity period. Last year, the entire festival of 42 days, there were approximately 38 lakh vehicles which were sold across India. This year, we are targeting approximately 45 lakhs, and we think that we are in line, because if you see that first 10 days contribute 20% of the entire amount of vehicles which are being sold, and then we are in line of achieving approximately 45 lakh vehicles for the entire 42 days of festivity.
Okay, that's the take coming in right now. Axis Bank, meantime, that's going to be also delivering its numbers. Let me take it across to Gaurav to find out what is it that the poll is actually penciling in for Axis Bank.
Axis Bank is set to come up with their Q2 results, and when we talk about numbers, now analysts are expecting net interest income to remain a little muted, and the reason being that when we talk about cost of deposit, they're expecting this to rise even in this quarter, and that is the reason why we may see just 1% growth on a sequential basis in net interest income. Now pre-provisional operating profit will follow the same trend. We may see a muted growth there as well, but when it comes to profitability, we may see provisions going down a little, because let's not forget that in the last quarter we have seen that there was a negative surprise which came from the bank's unsecured lending, and that is why provisions were high. So in this quarter, analysts are expecting provisions to go down, and that may support PAT growth of around 5% on a sequential basis. When it comes to loan book, now they are not expecting any kind of negative surprise like last quarter. Last quarter we saw deposits actually degrew almost by 1%, but in this quarter they're expecting advances as well as deposits to grow almost by 3% on a sequential basis, which will lead to around 14% growth on a YY basis in terms of deposits and 12% growth on a YY basis in terms of advances. When it comes to commentary, now what they're expecting is that any kind of commentary on the asset quality is going to be crucial for Axis Bank, because just like I said, in the last quarter we have seen unsecured lending being a little bit of problem for the bank. But apart from that, any kind of commentary on the margin recovery, any kind of commentary on net interest margins, because now analysts are also expecting net interest margin to go below 4% mark, which had been there for the bank for the last few quarters. So there also any kind of commentary is very important. And lastly, any kind of commentary on the unsecured segment and credit cost normalization is also going to be something that people will be watching for. So definitely watching out on how the numbers pan out and how the commentary pans out for Axis Bank.
So that's the take on Axis Bank. Of course, the call is at 5:30, where you can hear the management talk about their earnings. You can tune into ET now, and we'll bring you all of those voices. In fact, not just that, there'll be voices from Infosys as well as Wipro joining us on the channel as well, and you can tune in to hear their commentary about their earnings. For Infosys, we are working with an expectation of an uptick when it comes to the guidance for the full year. Maybe 4 to 5% is what they're likely to do versus 3 to 4% what they had penciled in, and the EBITDA margin guidance is expected to be 20 to 22%. That will be led by the 3% growth in the quarter gone by, improvement of margins by 20 basis points, and all of that will trickle into profitability. There is that acquisition bump up which we are expecting as well, and overall operational efficiencies are likely to trickle in. Tailwinds of anywhere between $3 billion to $4 billion. With respect to Wipro, the growth is going to be flat. Not bad given the kind of weakness we had seen from Wipro of late. But going forward as well, we are expecting that the guidance will be -1 to +1% for Q3. There will be a bit of an improvement in margins by 20-30 basis points, so that the number comes closer to 16.3, 16.6% thereabouts. And overall, we are expecting a decent show from Wipro this time around as well. Sudeep, what's your take on the IT majors? There is clear dichotomy. If you look at the, the large cap companies, they of course have been slower with respect to growth, but the likes of Infosys, etc., have managed to outperform. Any view or any top bets within IT?
Anisha, I think what's happening is there is a significant recovery and future recovery possibility as far as BFSI is concerned. And the technology companies which are catering primarily to BFSI segment or have a skew towards the BFSI segment are expected to win. So Emphasis, as we know, has 60% plus business coming from BFSI. So naturally, they're the beneficiaries of that, and we believe that they will continue to benefit from this trend. As far as other IT companies are concerned, anybody having a skew towards BFSI or a chunky business coming out from BFSI will benefit. The deal wins also will start happening in BFSI. We are positive on Infosys as well. We expect the commentary to be robust, and things should pick up from most of the IT majors also in the near future. The US economy is definitely heading towards a soft landing, and the fear of recession is behind. And obviously the deal wins will start kicking in. The postponements which happened will kind of get cancelled, and the projects will come back live. The bench strength will start coming down. So overall, we believe that the environment is improving for the IT companies. Of course, the election season in US remains a bit of a challenge. So maybe one more month, little bit of confusion, but post that, I think things should look really bright for IT companies.
Take on IT, but Sudeep, curious to know what's the take on the Hyundai IPO? Was a very slow starter, but finally it's got fully subscribed. Still some hours to go. Is it an avoid or a subscribe?
It is, if you're a long-term investor, you can surely subscribe. If you're expecting a major, pop on listing, I think that is not going to happen. And that's the reason probably we did see subdued subscription numbers. It's a large IPO. Basically it's a large OFS rather. When these kind of large IPOs come, they suck out a lot of liquidity. And because of the challenges around the entire automobile sector at this stage, I think the response has been a little bit subdued as well. But undoubtedly, from a long-term perspective, I'm positive on Hyundai. It is the second largest automobile company in the country and consistently has been so for many, many years, with about 17-18% market share and growing significant presence in the exports. So the potential is definitely there. We have seen what Maruti has delivered over the years to investors, and I'm reasonably sure Hyundai also will deliver good return to long-term investors. But major pop on listing, I think that's not going to happen.
Not happen, but the subscription figure has now become almost 2.3x. So sailed through quite comfortably by the end of it, despite all of those worries that were coming in yesterday. But time now to take some BTSC trades from our technical experts. Kunal, what's your BTSC trade?
So I'll go with two buy calls. The first one is one L&T. Now apparently this stock, after falling sharply in the first few days of the month of October, I think is managing to show signs of recovery. It's now on the verge of breaking above its 200 moving average. So would suggest a buy with a potential target of 3,700. Stop loss could be kept at 3,500. And NCC is the other stock which has shown good recovery in the last 3-4 days from sub 300 levels to now 310 plus mark. So would suggest a buy with a target of 324. Stop loss at 303.
Right, Naresh, what about your, or rather, Rudra, what about your BTST trades?
See, for me, IT is outperforming and I'm picking Tech Mahindra. Tech Mahindra looks very strong and it has given a small breakout now above levels of around 1,685. So I will be a buyer here with a target of 1,735 with a stop loss of 1,675. And also for me, Hind Petro looks a very good outperforming stock. So Hind Petro can be bought for a BTST target of around 440 and one can have a stop loss of around 428 for the same. So buy on Tech Mahindra and Hind Petro.
Okay, buy on Tech Mahindra and Hind Petro. The numbers for Jindal Stainless are also out. Just let's take a quick look if the stock is reacting. We'll try and get more details into how the performance has been, because I'm just looking at the initial numbers that have come by, and on a consolidated basis, those numbers will come up for you on the screen as well. Overall, it is expected it is going to be a decent set. Yeah, the revenue has come in at 9,776 crores, which compares with 9,797 crore last year. So pretty much flat on a year-on-year basis. And the profitability for the period has dropped a bit actually. So this time the profit is 610 crore versus 764 crore rupees that they reported last year. So the top line has remained the same, but the profitability is much lower on the year-on-year basis. And that clearly tells you that the story of pressure on margins is the biggest story that we're talking out of this earnings season. And that is what is playing out. That stock has taken a bit of a dip right now. It's down almost 1.3%, but we'll wait by and get more details. These are just the initial numbers that are hitting the screen for now. So overall, that's how earnings season is panning out to be. In terms of the other internals right now, on the losing side, CRISIL is giving up gain. Overnight, it was quite excited by the earnings that it posted. First Source is under pressure. You also have other names on the gaining side. So IOB is reacting positively to its earnings. There's a bit of a perk up on Nykaa as well, and BKG Foods is also doing okay in the trading session. Sudeep, what's your take on real estate as a pack? Because very varied kind of anecdotes coming in. On one hand, there are those mega ultra luxurious properties which are getting sold out in Delhi at 75 crore a piece, and while on the other hand there is that clamor of inventory being on the higher side, a bit of a moderation in prices, if you may. What's your sense on real estate?
Well, the ultra luxury segment is a completely different beast altogether. So if you leave that aside for a minute, I think there will be a pickup in middle income and low income housing in the near future. We expect interest rates also to start coming down in India, and when that starts happening, I think interest rates coming down does help lower income and middle income households to look for buying properties, and there will be a momentum back. So the developers having inventory and having business in these segments will start benefiting disproportionately in the near future. That's what we believe. So one should look at those kind of developers. Amongst the developers, listed developers who are around, we do like Godrej Properties even at current level. Even Macrotech at current level does look good. But these are all for long term, not for the immediate trading purposes.
In the interim, would you also look at some of the allied spaces when it comes to real estate as a sector, Sudeep?
Absolutely. We have been looking at the allied spaces for quite some time, and there are interesting opportunities there as well. Somani Ceramics is one company which we like at current levels. We also like some of the cement companies, A, because of the demand pickup which is expected, and B, because of the corporate the acquisitions and corporate action which has been happening. So Ramco Cement, Sagar Cement, and companies who are potential targets for acquisition, including Heidelberg Cements, can be looked at for the corporate transactions in the near future.
Right, okay. That's the take coming in on where within the entire realty universe one is seeing some value opportunities. But Sudeep, good to have you on the show. Rudra, Kunal, we'll let you guys go as well on that note. Let me take it across to Snehi to wind up the day for us.
Well, absolutely. You can sum up this day in a very easy word, and that is very, very tempered day of trade coming in for our markets today. Let's pull up the chart of Nifty and take a look at where Nifty is hovering around right now. But deeply under that 25,000 level is where was the Nifty at, and right now also under 24,750 levels. In fact, there you have it. 24,750 is Nifty on your screen. Other than that, also if you take a look at Sensex, 0.6% lower is where Sensex is at as well. Broader markets also have tanked away in today's trade. Nifty, mid-cap, small-cap, big losers of today. In fact, the mid-cap index has underperformed even the benchmarks and the small-cap in today's trading session. At-once decline undoubtedly in the favor of the declines in today's trade. But if you take a look at some Nifty gainers today, some stocks that were holding on to the greens, the likes of Infosys, whose numbers are expected shortly, Tech Mahindra, Power Grid, L&T, SBI, TCS, all of these stocks did pretty well in today's trade. You have Wipro and Axis Bank that will also be coming out with its numbers anytime soon. However, what did not do well today was Bajaj Auto. 13% lower is where that stock is on the back of an inline set of numbers. However, a whole host of brokerage notes tanked that stock away in today's trade. So that was the big loser coming in. Lots of downgrades and sell ratings coming in on that stock. Shriram Finance was another loser today. However, all eyes were on Nestle today on a poor set of numbers coming in. EBITDA, revenue as well as margins have missed the street expectations. A surprise beat coming in on the pad. But nonetheless, that stock was lower by 3.5% in today's trade as well. M&M, Hero Moto, Ultratech, Bajaj Finserv, these stocks continue to lose. If you take a look at some sectoral gainers and losers today, you have Nifty IT, that was the only gainer in trade today, up 1%, held on to by good numbers coming in from Emphasis. You have Infosys, Tech Mahindra, Coforge that all did well. However, what did not do well today was the Nifty Realty Pack. Spooked was that index today, lower by 4%. Nifty Auto, FMCG, Metal, Bank, Energy, Pharma, none of these counters, none of these indices in fact did well in trade today. But that is how we are shutting shop for the day. A couple of gainers, a whole host of losers in today's trade. But well, yes, that's why the Nifty is under that 24,750 mark.